Good morning. It's a Friday, the 12th of August. Welcome to Talking Bull. I'm Steve O'Hare, and this is Signal Centre Acuity. We're going to take a look at our normal daily headlines, so our news from the last 24 hours, news stories impacting the markets, and then we're going to dive into some technical analysis, look through the markets. I'm here on my own today, so it's just my views on the markets at this point. Yeah, let's dive straight into it with our headlines. So US producer prices declined 0.5% for July compared with expectations of an increase of 0.2, with year-on-year increase slowing to 9.8% from 11.3% previously. Underlying prices increased 0.2% on the month. Although the PPI data was slightly weaker than expected, there were sharp losses for treasuries during the day, with the 10-year yield increasing sharply to highs near 2.9%. That was from 2.75, I think we were looking at yesterday. So a little bit of a pip up in the interest rate increase expectation from the day before. San Francisco President Daly stated after the US closed that a 50 basis point rate increase is the base case for September, although she is open to 75 basis points. She added that a Fed funds rate of 3.4% is realistic for the end of 2022. She does not expect a hump in rates, with rates raised and then on hold for a while, with Daly also watching a series of inflation releases. Latest University of Michigan consumer confidence data will be released later today with the flash reading for August. We'll take a look at what we're expecting on that shortly. Most attention is likely to focus on inflation expectations within the survey, given the importance for expectations surrounding Federal Reserve policy. And UK June GDP declined 0.6% in June, and all sectors were in contraction for the month as the Platinum Jubilee undermined activity. All felt like a great idea at the time, taking another holiday. The monthly decline was, however, better than expected decline of 1.2%, and the quarterly GDP contraction was held to 0.1% compared with the market expectations of 0.2% retreat, still a negative reading. So that's the headlines. Let's dive into the market. Obviously, we're live on a number of channels, YouTube, TradingView. By all means, join in the conversation. We'll try and make this interactive. I'll try and keep an eye on the comments coming through and answer your questions as and when you ask them. So let's make me a little bit smaller. Let's drill down into Bitcoin or cryptocurrencies. We obviously always take a look at Bitcoin first. Great market to watch and very interesting market now eventually from a technical perspective, obviously, as well. So we saw a big spike higher yesterday in Bitcoin. Prices got up to 24,921 on this price feed chart, and but the price action didn't manage to hold those gains. So we stalled in front of 25,000. We're seeing a number of times when we've broken above this resistance level, we've drawn in the chart, it's a horizontal resistance at 24,280, and we've seen it rejected on 3 occasions, 29th of July, 30th of July, and yesterday. These are significant rejections. When you do tend to get prices moving above resistance and they reject, then it's not a good sign, especially for the bulls in the market. And predominantly Bitcoin is full of bullish traders and people who are holding Bitcoin. So it's not like the normal markets we look at where a lot of assets are used as hedges and things like that. This is just a natural holding market. Overall, my view on Bitcoin is for lower price action. We still haven't really seen that the flush out that is needed for prices to extend higher, and this is a sign of just the market slowly moving lower. We've got this nice corrective channel that we're seeing, and but volumes dropping off, and there's no real sign of any real meaningful correction that would lead me to believe that this is a bottom in the market. Further downside is expected. That's the candle yesterday is a doji candle, but you could also almost see it as a shooting star also. So as long as prices remain below here, further downside expected. Ethereum, I haven't had a look at Ethereum for a while. That's managed to get above the broken support level, which should turn into resistance. It held resistance for a while, but we are trading above it. This is doing a lot better job than Bitcoin has done. Bitcoin's break level was around about the 29,000 level, and it's still trading well under that. Whereas Ethereum, we can see, has pushed higher. Nice couple of days of positive price action, and still holding quite nicely around here. Psychologically, $2,000 would be a natural resistance level. Above that, if we're really looking for some decent technical analysis or technical levels, between 2170 and 2390 would be the next level of resistance on Ethereum. Ripple, lots of talk about Ripple, lots of things going on in the news about Ripple. And we can see we are forming what looks like to be a bit of a base. You can see the makings of maybe a inverse head and shoulders formation. Still got a lot of work to do though for this to play out. So let me draw it on here for you. An inverse head and shoulders formation. We get the left shoulder. This is just a rough drawing really for you. Something like that. But the main levels I would watch would be the this neckline, where the neckline would come in around about this level here, around about 41 cents, and that would be for me the main resistance level currently to watch at the moment. Now, if we manage to hold above there and close above there on a daily or a weekly basis, ideally, then that would be a very positive outlook, because we're seeing these lower highs. However, still a long way to go before we get too carried away. Further resistance up around about the 51 cent level once Ripple manages to bypass this initial resistance. So let's take a look at commodities now. Taking a look at gold and what gold has been doing, it's hugging the top of this bearish channel that we've been in since posting close to the all-time highs back in March this year. We've got a nice trend line drawn in now. This is a bearish channel, and we have had a reaction from the major support level over well, since the middle of July, really. This really nice move higher has formed some sort of temporary bottom. Still a bit further to go in terms of where we think the gold could really potentially go from here. We're at and around the $1,800 level. It's quite a psychological level. 1830 is a 38.2% Fibonacci retracement. That's a level to watch. But really, maybe a retest of the 1680 area would be the next move from here. We've seen over the last couple of days a couple of bearish candles. Again, a bit of a shooting star doji-like candles here over the last 2 days of price action, but it's still trading 1794, so a little bit of potential to really sort of like put the cat amongst the pigeons. If we can manage to see some dollar weakness, this would lend a hand to gold. Otherwise, yeah, further downside in gold to retest this support level. Overall, long term, I remain slightly bullish on gold. Silver's come to the party and playing quite nicely as well. Yesterday's price action was slightly negative, but it is performing as well as gold at the moment from a percentage perspective. And we're seeing a nice little potential ABC correction, where you see a first leg correction, second leg normally equals the first leg. That could see a rally all the way up to around about the $22 level if it performs well. Looking at natural gas, we look at the natural gas and the oil markets from the energy side of things, and 3 days of really positive price action in natural gas. We topped out around about just under the $9 level yesterday, 8.98. Resistance above comes in an area of resistance between the 9.40 and the 9.65 level, and this is still holding quite nicely. As long as prices are maintained above the 755, then we should see this really continue to probe higher and further upside potentially for natural gas. Oil has responded well this week also. We thought we hit a base on the WTI crude oil around about the 86.50 level. We've broken back above the previous support, which turned into resistance and could potentially turn into support again. So a nice little push higher over the last week, and the prices eventually got up to 94.28 on WTI crude oil before pairing gains in the afternoon. Start off to a decent start this morning, so further upside potential on the WTI crude oil. Brent pretty similar as well. Really nice sort of bounce from the lows, and potential for an early sort of like sign of maybe a double bottom forming here. Really need to get a break above the 106.20 level, so that's about $8 away. That's nothing to sort of think about too soon, but keep an eye on that over the next couple of weeks. Trading around $99. Obviously, psychologically, $100 would be a resistance there, but not only a mild resistance in terms of where the potential is for the upside. So slightly positive on gold there. Let's drill down into indices. I'll focus on a couple of the major indices. Let's take a look at S&P, which has hit a 61.8% Fibonacci retracement level yesterday. It's trending nicely higher from this corrective formation in this channel, and spiked higher yesterday really aggressively. Hit the resistance, 61.8% fib, very important resistance level, and formed a shooting star again. So these shooting stars are showing up over a number of different asset classes. So definitely something to bear in mind. Support coming in the form of 4,200 in S&Ps. A break below there and a close well below there would form a shooting star formation. That's a 3-candle formation. You get the bullish candle up, you get the shooting star, and the bearish candle down, and that's a sign of a top. So watch this carefully. We had the sign of this last week, and it failed to stop there. It carried on higher. So definitely something to watch in the coming 24, 48 hours. Same sort of price action in NASDAQ. The punch higher through resistance. We got up to levels that we haven't seen since early May, and stalled, reversed really sharply from there, forming that shooting star. So there is potential for this market to start to top out. We've seen these volume rallies, these rallies in indices on low volume. So that's a sign of bearish divergence when the markets are rallying. The volume isn't really lining up with the market rally. We're not really getting the institutional buyers. They're probably sitting on the sidelines waiting for a little bit of value lower down. Let's take a look at DAX. DAX stalled around about the same high from the 4th of August, got up to 13,800, just shy of that, and reversed sharply. Off to a decent start this morning. So we've got resistance coming in just above there. The 61.8% fib again, decent level to watch. That comes in at 13,822. So there'll be plenty of people thinking this is an opportunity to take profit or start to set shorts for further downside. When we get in the GDP numbers we're seeing, and the inflation figures we're seeing, and the interest rate rises we're seeing, it's not a really decent background story for indices, especially over the medium term timeline. So let's take a look now at FX. Really start with the dollar. Dollar index, we saw that sell off a couple of days ago. Yesterday's price action again was negative, although we managed not to make a new low. Prices held in front of the previous day's level. So that's a little support coming in at 104.65, a band of support further down in dollar. This dollar story is still not over yet. A little bit of a top potential, but really need to see further downside for that to be significant in any way. We've just seen this nice little correction, this nice little slowdown in dollar strength. I still think there's further dollar upside, and this is a small opportunity to jump on this amazing rally that we've seen from the dollar over this period of 2022. Let's see how that affected euro dollar. We've got a nice little uptrend that we formed. Nice little ascending triangle this was, although it has broken to the upside. Let's take away that. And this looks like a nice little, and also bring in the 21-day moving average, which is an average that I like to see. We can see how it's really running along in a supportive way for euro dollar at the moment. That's significant. On the downside, that comes in around about the 102.12 level, so almost a cent lower. And price action from yesterday, a little bit indecisive, but ended on the positive side. Resistance coming in at 103.64. A break above there will maintain this nice little rally we're seeing in euro dollar. Cable seen a similar sort of price action, although yesterday was quite muted. The day before we saw a nice rally from the 21-day moving average, and resistance coming in initially at 123, and above that we've got 123.30 and 124. So a nice whole 100 points to watch of resistance on the upside, but we've seen a nice little start to a potential correction. When we were talking about inverse head and shoulders earlier, this is a bit more classic. Here we see the left shoulder formed, neckline, quite an acute neckline. Definitely a level to watch. I would really expect to, I would really be prefer to see a break of the 123 and prices hold above there to confirm this reversal formation. So something to bear in mind, although I'm saying that dollar is stronger over the medium term, potential maybe for a little bit more weakness in the short term according to the sterling dollar chart. So let's take a look at what other markets we're going to dive into. Let's just take a look at dollar yen. And yeah, we're seeing that this sort of this bearishness in the dollar creeping into dollar yen, obviously, and the 21-day moving average capping price action at the moment, although we've posted a higher low. So that's given us a little bit of a potential for a triangle formation. So here we go. Let's draw this triangle formation in, something like that. So plenty of room to play out, and this to continue sideways. 134.20 is a pivotal level, support, resistance on a number of occasions. And yeah, we've got the 21-day move for an average trading above. So a nice bit of price action yesterday. Dipped lower, was bought into, posting a bit of a bullish hammer on the chart. So that's a decent one to look at. Yeah, hi Ryan, thanks for your comments saying he's got a short signal on BTC, maybe wait for confirmation candle of the shooting star, although the risk reward does not seem worth it. Any recommendations on trading a pattern like that? Yeah, let's just jump back quickly to the Bitcoin, and obviously, you know, it all depends on time frame and your risk profile. So yes, shooting star candle, these are obviously, you're talking about a shooting star candle which spanned a, what's it, about 1100 point range. It's a big old range. Yeah, so and obviously Bitcoin, a very risky asset to trade. And the reason I say Bitcoin is more of a buy and hold, because there's not many people out there with an incentive to be short of it. Not like any other markets, people who want to hedge their portfolios, hedge whatever asset they need to. Sometimes you want to hedge indices against a portfolio of whatever's in your portfolio. You may want to set a hedging index in a different geography or geographical area, or a different asset class completely. Bitcoin is only, for me, something, it's almost like it's just a store of value which people buy and hold and sit there and hope that it goes up, which, you know, it has done over time, but it's seen a major reversal now, and you're seeing the interest dry out. There's no real reason to be short of Bitcoin unless you're trading Bitcoin against other cryptocurrencies. Bitcoin's the main driver, so that's why I say it's a really, it's sort of like a buy and hold. That's the normal strategy is a buy and hold strategy for Bitcoin. Yeah, hope that makes sense. And yeah, let's dive into really what we do on the at this part of the show. Let me see if I've covered all the assets. Any assets I haven't covered or markets I haven't covered, just shout out and I can take a look. Otherwise, we're going to take a bit of a look at the gun to hedge challenge. We'll see what we've done over the last couple of days while we've been with while I've been with Jamie. Jamie's not in today, obviously. Hope you realise that. let's take a look at what we've done over the last couple of days. A reminder of what we do in this: we pick a trade live on air. We have a stop and a target on that trade. We enter at market. Trade ideas expire at 9 o'clock UK time in the evening, or if they hit stop or the target, they expire, and we mark the performance. So let's take a little look at how Jamie fared yesterday. He was going short of dollar yen, potential bearish flag on the hourly chart, and looking for losses to be extended. He started off, got off to a really, really good start, got down to 131.74 before prices reversed. At 9 o'clock, prices, he wasn't quite stopped out, although eventually it was. He wasn't quite stopped out, lost about half an hour there. So unlucky with that, Jamie. Euro New Zealand dollar, how did this play out? This was my trade idea, and it didn't do too badly. We saw prices move down quite early doors, and we managed to get some P&L out of there. Not a great deal, 0.2 or something like that risk reward. So at least it's something. So I did okay for you yesterday overall. So what's my trade idea of the day today? My gun to head trade idea. Now I can't help but like saying, well, I have slated Bitcoin, obviously, so surely I've got to go for a sell on Bitcoin. So as you can see, I'm always looking for the topping formations, a little bit of a weakness maybe in my trading prowess, but I'm going to go for it again. So a nice little formation here, topping formation, and we can be quite aggressive with this trade idea, because if we start to see some sort of head and shoulders formation, the right shoulder could be coming in around about the 24,100. So let's be quite tight, quite aggressive with this trade idea. Let's go. Oh, there's the dog barking. He's saying, "What are you doing? Selling my Bitcoin." Let's go for this. Let's go for giving it a little bit of room. It's a 4-to-1 risk reward. So if you're risking £10, you're looking to make £40, or if you're risking £100, you're making to look £400. It's 4-to-1 risk reward. The reward is 4 times the risk. We always look to try and do at least 2-to-1 for our trade ideas. So this is the one I'm going to go for today. I'm going to there we go. I'm going to sell Bitcoin at 23,973, targeting a move to 22,773 with a stop at 24,273. So only a 300-point stop, which isn't a big stop in the world of Bitcoin. So also got a comment here. Are you familiar with the long squeeze? Is that what causes the bear flag pattern? Do you think it may happen again in the near future in Bitcoin? So long squeeze, not really sure what time frame you're talking about. The bear flag that I have here is on a daily chart. So you're basically looking at the price action coming lower. I suppose you could say it's more of a if you see prices move higher, like in this flag pattern, these are bearish flag patterns because they react higher. This is a short squeeze. So people are short, and bulls are trying to squeeze them out. So it's a short squeeze. Yeah, I think it's a similar type of formation that we're seeing. And if you see it, we saw it here as well. Let me draw it in here. Bearish flag. And to sort of like, you can get a measured move out of these as well. You sort of take the flagpole like that. That's a bearish move, targeted move down to there. That's what you would have got back there. So yeah, this I think this continues. Yeah, you don't really want to hear my full view on Bitcoin. It's pretty ominous, and yeah, it's probably not the day to be talking about it. But anyway, we'll talk a bit more about that another time when we've got a bit more time. And now we'll Yeah, a short squeeze is when it goes up, Brian. This is exactly what you're seeing here. The market is moving up, shorts are being squeezed. So this is a short squeeze. Yep, I hope that makes sense. Right, let's have a little look at what's going on later today. We've got the University of Michigan Consumer Confidence Index. Now that is definitely one to watch. That comes out at 3 o'clock later today. Key events over the next week. We've got US consumer prices on the 17th, US retail sales on the 17th, US Federal Reserve minutes on the 17th. So a busy old day next week. And Australian employment report on the 18th. And yeah, that's what we've got coming up today and next week. So hope you've enjoyed this week. Me and Jamie back on Monday, Joe back on Wednesday, and we look forward to seeing you all then and hopefully giving you a little bit of information to enjoy your trading day. Take care.